Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the Viper tools in the futures markets, you are absolutely in the correct place. Tonight's topic is, what is it? Good trade entries can make a huge difference in your trading. So we're going to spend a lot of focus tonight on trade entries. This is the first webinar I'm ever doing with an IB in. So that'll be interesting to see how that goes. I actually have an IB in right now. So if I pass out, I'll let you know. I'm just kidding. Everything should be fine. Let's go ahead and get our standard disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, let's get over to some charts. Today I'm going to start off with ES. And I think I'm going to start off with a quick recap of what everybody is looking at here. We did have an open house this week where we invited quite a few people in. So if you have participated in that, welcome. We do have a live room tomorrow and a webinar on Saturday morning. You will be invited to that. And what you are looking at here is the E-mini S&P futures called ES. Today is May 16th. So I'm going to quickly go through this, and then I'm going to shift to crude oil and some other charts. So here's midnight Pacific right here. These ovals are real-time support and resistance levels. They're called predictors. So you can turn those on and off using this little button right here on the toolbar. We also have object trader alerts, which are the mid-band and minimum criteria alerts that Gary's been showing in the live room as of late. I think that's been introduced about a week and a half ago or so, so it's still relatively new. People are just learning how to use it. And then, of course, we have the other indicators on here. We have the background colors. We have the bar colors, red, yellow, and blue. We have the stealth line, which is this sort of green line when markets are moving up, and a little red line that follows the market on the way down. And then, of course, the most prominent feature on here is the bands. We have 4 bands below the mid band, which is the thick line in the middle of the bands, and then we have 1, 2, 3, 4 bands above it for a total of 8. The thin red line above band 2, of course, is line 2, and it features prominently in our trading, and you hear that called out a lot in the room. And we have the line 6, the thin green line here, which is the top of band 6. We also use that. Of course, the power meters are the 4 trends on the chart. And we have the swing levels in here, which is when the swings are established, it paints these numbers and these little dots on the chart when those are helpful if you're putting lines on your chart for, hey, Bruce, Chris, welcome. Franklin, folks coming in a little bit late. Don't worry about it. This is recorded. And we're just kind of getting started, so you haven't really missed too much. Just doing a quick overview of the indicators here. So what I'd like to do is this. When we talk about entries, before we could talk about entries, and I usually do this, so I'm just going to take a few minutes to do it, is you have to know what market condition you're in. And when we say the term market condition, markets can either be going sideways, or they can be going up, or they can be going down. Now, when we say sideways, we're meaning that a market can be stuck in what we call a range. Let me show you some examples of range-bound trading on ES. And then we're going to look at other markets, and then we're going to do a deep dive on actual trade entries themselves. Here's an example where ES was kind of going sideways. Big old range right here. Something like that, going into midnight. This would have been the end of the Asian session, going into the European session, midnight Pacific here. You had a little consolidation patch, a little bit kind of right in here, before the market broke down and started to sell off. This is into the close yesterday of the market on ES. You can see it broke down, took out support, and started to sell off very precipitously. And then going into the early sessions of the European session here, we went into a very strong protracted uptrend to the right, evidenced by the fact that the background color is green. The bars are predominantly blue. Normally you have a green stealth line that follows the market up like that. We use that in our trail stops along with line 6 in an uptrend. And then, of course, the mid-band and all the bands surrounding it are also heading up like a set of stairs going up to the second floor of your building. So the way we like to trade this is as follows. We are what you call pullback or retracement traders. So most of you, of course, know, but if you're new, this might be new to you, but what we do is we never, we very rarely, or if ever, sell what's called the thrust part of the move or the push in the trend direction. Of course, if you're in a range, there is no real push or thrust. You have to just basically trade the range like here and here, if the range is large enough. So let's look at some examples of push and pullback, and then I'm going to get off of ES. We're going to talk about trade entries, and then we'll pull up some other charts, especially like crude. There's a lot of crude traders in here. I know that. Here's an example of a push right here. Now, when you go into, in this case, it's an uptrend. Obviously, the thrust or the push part of the move is up. In many cases, depending on how far this thrust goes, it will turn the background green. So this type of price action here, and sometimes it goes higher, sometimes it just barely breaks it, like right here. Sometimes it can run and then pull back. Needless to say, this is telling you that now you're going to start to look for long trade entries or buying support on retracements or pullbacks. So here's a good example of one right here. Right here. Now, what I'm going to do is this. Here's what I'd like to do. Now, some of you are probably saying, well, Charles, I need some more detail around the actual entry itself. I can hear the rumblings in the background. I understand the big picture, and the demand and the thing and the mid-band and all what have you. But how do I actually get in? Is that a fair question? Most people are kind of wondering right now. Either in the back or the forefront of your mind. Like conceptually, you know what to do, right? From a 10,000 foot level, you can look at the big picture, especially after the fact, right? After it's already done. How do I know where to get in and when to get in? Isn't that the key? Okay, we're going to cover that in depth in a minute, so hang tight. Here we have some more examples of thrusts and pullbacks. Is this thing on? Got a lot of people here. Anybody there? That was actually a question. That wasn't a facetious question. That was an actual question. Is anybody wondering like details of how you actually get in these trades? Anybody? Hello, home? PW? Oh, PW just woke up. Jim's there. Yes, I need detail. Okay, good. We'll get to that. Don't panic. Mario's here. Franklin just woke up. Paul just had a cup of coffee. Turn on your espresso machine. You got to wake up. All right, so let me very quickly go through this. Yeah, so here's another example of a thrust. That's a push. Here's a pullback. And the depths of the pullbacks are really what are the depths in the actual entry technique itself. So here's an example of something that just barely sort of nicking the edge of a minimum, what we call minimum criteria, where you come below stealth in line 6. Here's an example of a mid-band trade, where the bars sit right on the mid-band like such. Here's another minimum criteria here where it pulls back just enough to get you in. And then here's some more mid-band trades over here. 1, 2, 3. PW says, I think I'm choosing the right place to get in, and then the price goes against me. Okay, we're going to talk about that, PW. We're going to address that. I think a lot of people face that issue. And we're going to show you how to fix that tonight. Everybody who's struggling with that, we're going to definitely address that, so you don't get head faked into moves and you take the legitimate moves that turn out to be good trades. Let's go on. I want to look at another instrument. I'm going to look at several, and then we're going to circle back and discuss detailed trade entries. Stand by. In fact, before we do that, let's do this. I want to do a pop quiz. There's still some new people coming in here. If you're just coming in, don't worry about it. Like I said earlier, this is recorded. We'll get this up on the web for everybody tomorrow to watch. You have to take off, really, no problem. But what I want to do now is I want to talk about, in addition to trade entries, we have to know about the trend and trend changes, right? You want to do a trend change together real quick on ES before we move off of it? Trend change on ES. Okay, I'm going to advance the chart. I'm going to do it between 9 and 9:30 a.m. Pacific time. And when you think that there's a trend change on ES, you're going to type in the letters TC. Are you ready? I'm going to go pretty quick, so you're going to need to follow along. And if you're brand new, don't worry about it. If you're still learning, you could type in TC if you think you see it, but if you're still, a little bit confused or learning, don't worry about it. We'll teach you more about this. In fact, I'll go through it a little bit in detail here tonight. Looking for a trend change on ES. So I'm going to help you out. It does change trends. But we're going to pretend that we're watching this market together at 9:39 this morning. Ready? I'm going to go ahead and advance this chart as if we're watching it together in real time on the bar chart. Here we go. TC when you think there's a trend change, right? Okay, here we go. There's 944, 947, 9:59. We're coming up on 10 a.m. Pacific. Remember, when you think there's a trend change, you type in the letters TC. Boop, boop, TC, just like that. 10:03, 10:06, 10:14. So I'm going pretty quick. In other words, between here, for instance, here's 9:55, here's 10:03. That's actually 8 minutes, and I showed it in like 30 seconds. So this is probably 500 times the speed. 10:26. 10:30. 10:47. Now remember, the purpose of this exercise is to discuss and observe when potential trend changes actually occur in a market, not necessarily where the trade entry is. Those can be two different things, right? You have the concept of trend change, and then you have trade entry. Sometimes they're the same, occasionally. A lot of times they're not. Okay, continuing on. 10:50, we're coming up on 11 a.m. Remember, we're looking for trend changes on ES. There's 11 o'clock. Okay, I'm going to stop right there. Now, how many of you noticed, okay, I want to address two things here, and this is something that is going to take some of you a little bit of time to learn, and that's okay. When you're in an uptrend, as we were over here, a very strong, pronounced uptrend, pretty much most of the morning, from even the European session all the way through after 9 o'clock, and you get these deep retraces here. You get a mid-band retrace, and then you go one, you're going to pull back to the mid-band right here, and then you get one that goes a little deeper all the way down into here. What is still confusing for a lot of traders is that when a swing level is broken and the bars turn red, many traders think that this deep retracement is an actual trend change in and of itself. So in other words, the green background goes away, right? We take out this swing right here and we get red bars. So visually, it sort of, how would I say, sort of tricks you a little bit into thinking that this is a trend change. Now, even if it was, in this case it wasn't, and I'll explain in a second, it doesn't matter a little bit in the fact that you're so far away from the midband on a thrust that you wouldn't trade this anyway, right? Remember the concept of thrust retracement? So in the case of a change to a downtrend, what that means is that now the thrust will be downward. Just like we had in the case of the uptrend, the thrust is upward, the push in the trend direction, right? The push in the trend direction. In the case of the downtrend, it would be a push. Now, I could agree with you that this swing was broken, the background changed, and the bars are red. So visually, it does look like this might be a trend change. However, this could also be what's called a deep retracement, profit taking on ES, and it could very well bounce and come back up to here. If you're buying these deep retracements, Gary calls them phantom sometimes in the lab room. If you're looking for a deep retracement or phantom, that would be an example of it here. Now, if you take these trades, your goal is to get back to the midband. You want to at least get back to here. That's what your goal is, right? Now, if it turns out that this is a bona fide trend change, it will put in a lower high and then roll and then head lower. Let's look at what happens on ES. Okay, here we get a bounce. So this was a legitimate long trade off of line 2 on a deep retracement, right? We come at least to the midband and we break it just slightly up to here, around 89.75, just shy of 90, right? We kiss that, and we start to roll over and head back down. Now, this is something that you want to, if you can, really sort of train your subconscious and your psyche and your trading spidey sense, if you will, to make note of the fact that that swing was established here. You could make the case that you sort of had another one right here, and you could have put this on your chart where it tried to bounce off the midband here. See it? This is where, off a deep retracement, it came right back to, kissed and rolled. So when this happens, this is called a lower high. In the case of a lower high, what does that mean? Anybody? In the context of our trading, what does a lower high mean? In fact, when we see it in the live room, we'll sometimes call it out. Hey, make note of the fact that was an ES, for instance. If this was in the room, we might say something like, hey, that was a lower high right there. We got to keep an eye on that. Why do we care? What difference does it make that that's a lower high? Who cares? Whatever. What difference does it make? It's just bars on a chart, right? Just more bars on a chart. Markets go up and down all the time, right? So what? What does that mean? No follow through? A change may be a foot, Walter? Anything else? Well, what it's saying, isn't this kind of price action kind of telling you this? That if, in fact, this deep retracement that occurred here, if this, in fact, was going to be a trend continuation, would not the price have done this, right? It should come back at least to here, challenge the swing at 94, and possibly take it out for a trend continuation. But is that what happened? Let's continue on. Is that what happened? No, quite the opposite. It flipped and went the other direction, thrusting down and now changing the background to red. Right here. So obviously you can see very clearly that this trend continuation to the top did not occur. And so in that sense, lower highs and lower lows are significant in that it's showing that the momentum is no longer to the upside. The buy programs that had been running all morning since way over here, way over here, and even back into the early parts of the European session, were running out of steam, and we're no longer able to push the market back to the highs and take it out. Yes, that's right, PW, Jim. That's right, you're getting lower highs and lower lows. So would you all agree then, looking at this again in this context, that this thrust where we take this support level out, right here, where the deep retracement bounced. We break that. The bars are firmly red. And what's starting to go on with the mid-band and all the bands? Are these going up or down now? What direction are they going? You got a red stealth, background's red, bars are starting to turn red. Would you not agree that this, in fact, right here, this thrust down was, in fact, the trend change right here? And most of you got that. So just to circle back, some of you early birds typed in that this was the trend change right in here when this formed. And obviously you can see that that was not the case. We needed to have a lower high and follow through the downside. So now we're looking for what? Once this happens, once this thrust. Are we looking for longs now or shorts? L or S? Are we looking for longs or shorts now that this has happened at 10:50, almost 11 a.m. Pacific, and we're still trading it? Maybe we're in sim, or maybe we're just putting one contract on. Longs or shorts off of this thrust right here? What direction, what types of trades are we going to be looking for now? Anybody? Shorts. Yeah, right. Shorts. We're looking for shorts. 5 seconds on the clock. Quick pop quiz. Is this the right place, yes or no, to fire a market short order right down here? Is this where you want to get short? Yes or no? Type in a Y or an N right here. Is this a good trade entry? Market short right here. I mean, you know, I just said it was a trend change. Didn't we say it was a trend change? Trend change means short to me. That means we better get in. I think that's what that means to me. That means pull the trigger, I think. Right? Get in? Yeah. You just said red background, bars are red, bars stair stepping down. Here's all the bands. You said the bands are stair stepping down. It's time to pull the trigger. This thing's going to tank 100 ticks and you're going to miss it. What are you waiting for? Hit that sell button. No. Right. PWBB. Good. Greg, Jim, everybody. David H. Franklin, OM, Mario. Good. Henry and Paul. No, no, no. We must wait for retracement. Now, when we say good trade entries, so here, in fact, we have the thrust. In this case, it's down, right? Now, where might the market go if we're going to get in it? You said pullback, right? Somebody said pullback? Who said pullback? Who said retracement? All of you, right? Where might this go to get in? You think it could go here? Let me give you some options. Could it go right here? We'll call that option A. Could it go maybe to here? We'll call that option B. Or is it possible that the market could go up into here? We'll call that option C. Or would A, B, C all be good? Possibly. Looking for short entries, right? Mid-band or perhaps a little bit more, Paul? So what we're doing, let me be clear to everybody. And by the way, I still see more people coming in, new faces that I was a little bit late in getting the reminders out. My sincere apologies to everybody. Today just turned out to be a swamp crazy day where all manner of things were happening to me. My sincere apologies. But this is recorded. It will be on the web for everybody. It'll be in the subscriber area as well as the webinar page on the website. So don't worry if you missed the first half. It's all good. We got your back. Yeah. So don't panic. Don't worry about it. Yeah. So for those of you that are new, when you're looking to the short side after a trend change, we have several different types of trades, and you're going to see this in the called in the room quite a bit. And now, of course, we have the alert. You know, you can turn these alerts on, minimum criteria, mid-band trades, right? You can turn the longs and shorts on. Now, just to be clear, most of you know this, of course, to state the obvious. When you're in an uptrend and the market is heading up like this, obviously what you do is you turn the long trade side on. So long minimum criteria, phantom longs, mid-band longs, right? You're trading the longs, so you want those alerts, you want those flags, right? Similar on the short side. When you're looking for short entries, mid-band short, right? minimum criteria short, phantom short, deep retracement short. You're turning those on, right? And that's going to flag it for you. Now, the reason that I'm showing these three different areas is that, just to blow this up so everybody understands what you're hearing in the live room, the minimum criteria trade would have to set up here, where you get a close above line 2 and the stealth line, and it kisses and rolls up in this area right here. Mid-band trades would occur in the bands immediately above and below, and actually on the mid-band itself. In the case of the shorts, that would be somewhere more or less in here. And then, of course, there are cases where the depth of the retracement can go a little deeper and push as far as up into here. That's a deep retracement or a phantom, depending on the criteria. And that's also not a trend change, but a deep retracement short. Now, armed with this knowledge, I'm going to go ahead and advance this chart. And when you think you see the trade entry short, and I'm going to help you, of course, it's short, that you want to take, let me clean this up a little bit, get some of this older stuff out of here, and that didn't happen. Let's get some of this off of here like that, make it a little cleaner for you to see. There we go. Okay, take that off. Let's take this off, take that off. There. Okay, that's a little bit cleaner, easier to see chart. Now, when you think you see a short setup that you would like to take on ES, I'm going to show this. We're watching it in real time, starting at 11:05 Pacific. And you say, type in the letter S. Very simple. S for short. Ready? Here we go. Okay, there's 11:15. There's 11:27. Remember, you're looking for short trades. Short trade entry. We're looking for good short trade entry after the trend change. We all agree the trend change happened right here. So we're looking for shorts. You're going to type in the letter S when you believe that you see the short trade set up on the retracement that we just illustrated with the three arrows, thusly A, B, and C, in terms of the location of where it could go. Now we're at 11:32 Pacific. Okay, stand by. I had the chart paused. My apologies. My whole day's been like that. Oh, man, help me. I'll be glad when this day's over. Watch a little basketball, have some dinner, and go to sleep and start fresh on Friday. Okay, where are we at? All right, let's go back to where we started. All right, so this exercise is, together as a team, we're looking for short entries. Here again, A, minimum, B, mid-band, C, deeper. These are the sweet spots on the short side where we're looking for entries on retracements. We already agreed thrust, trend change is afoot. 11:07 on the clock. We're typing in S when we see the trade entry we'd like to take. Here we go. Okay, let's see. I'm not paused. We're ready to proceed. 11:13, we are proceeding. Yeah, Walter. My planets have gone retrograde today. They're in some funky pattern. I don't know what they're going. Yeah, you have days like that. Running in sand, whatever. All right, there's 11:24. 11:27, still on this morning. Today is Thursday, the 16th of May. There's 11:31. Looking for short entries on ES, recreating the bars as if they occurred in real time. There's 11:40. We're typing in an S when we believe the short trade entry is upon us. Okay. There's 11:47. There's 11:51. We're coming up on noon, an hour to the close. Okay, I'm going to stop it right there. All right. Now here's what I want to share with the team, everybody here today. This is really important, okay? And I say this almost every webinar. In fact, I think I pretty much say it every webinar. We show because we have traders all over the world, and some of them have been trading with us 9, 10 years, okay? And they trade currencies in the Asian session. They trade all sorts of, commodities in the European session. Sometimes they come in the room, sometimes they don't. We have to show all kinds of trade setups for everybody that wants to trade. Now, having said that, does that mean that you have to take every trade that sets up? Yes or no? Every trade that sets up on a chart, whether it be minimum criteria, mid-band, or deep retracement, do you have to take all of those trade setups? Everything listed here, do you have to take all of them? See all the listed, everything here? Mid-band, minimum criteria, long, short, phantoms, trend changes. You got to take all this, turn them all on, right? Just turn them all on. Let everything, the bars start blinking all over the place. Take them all, right? That's the most opportunity you're going to get. Why wouldn't you take them all, right? I mean, if you're saying, hey, I want to make money trading futures, I better take all these trades. No. No, 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 no. So I'm going to share with you two things that are critically important to your success. Even if, tell you what, I'm going to say this, even if you don't trade with us, I want you to take these two things away that are going to be invaluable to your trading future. And I'm going to say it just like this. Here's what it is. Now, the first thing is going to be related to what I'm saying right now, and I'm going to put this. It's kind of prior. I'm going to call it 1A and B because they're equally important. You need to find the trade Here, I'm going to say it like this: set up the that you are most comfortable with, and then only trade those setups. So what does that mean? What am I talking about? What is 1A? What is that? What am I saying? Here, let me see if I can get this thing most comfortable with. Let me do a break. Let me do a break in here. There we go. There. So what that means is setups must meet my rules. That's right, Dennis. So if you came back, let me help you out a little bit. If you studied our charts and you went, say, in sim, okay, hypothetically you're in sim and you're practicing on different things, and you see minimum criteria setups. Now, some of you, let me go back and let me illustrate this in our reconstruction of the ES short trade. Some of you typed in S for short when these bars formed right here. Now, looking back, team, I'm saying everybody, all of you, was that legitimate to say that that was a short? Yes or no? For those of you that typed in S's, when these bars formed, based on our definition of short trade entry, was that a legitimate S entry, yes or no? Now that you look at it, well, did we not say in our prior definition to this exercise that if the bars closed above stealth in line 2 in a retracement off of a thrust in a downtrend, that this is considered a minimum criteria short entry? Do these bars meet that criteria, yes or no? It's a pretty simple question. Either they meet it or they don't. It is a yes or no question, and there is an answer to it. Now, did you get filled? No, you didn't get filled. So if you use the object trader region box and engulf the candles with the short only enabled, you never closed below the box, so it never turned into anything. But notwithstanding the fact that you were not filled, did it meet the criteria of the definition of a short trade, yes or no? The answer is yes, it did. So if you typed in short here, you were correct. That meets the minimum criteria. However, it was never filled. But that's a secondary issue, right? That wasn't the question. The question wasn't what there was a question. Let's only call out trades where the short actually fills. Was that the question? No. The question was, did it meet the criteria? And the answer is yes. Now, here again, that being said, if you have experimented with various instruments and you have found that these minimum criteria entry trades, you can see them, you realize what they are, but you're not very good at them because for some reason you get in early, you get filled short, and then the thing stops you out way up here. You know, you never seem to get it right. You put a box, it flips. You just get crushed on these every time. Then if I am describing you, then is the minimum criteria trade like this on a short, is that a trade you should continue to take, yes or no? If you're getting crushed on this type of trade, should you continue to take it? You've tried, 4 different instruments. You tried the minimum on gold. You tried shorting crude when you saw it in sim, and it just didn't work out. You put a Russell trade on and just got crushed on a full stop. Just these minimum criteria, just know you conceptually understand them. But in follow through as a practical matter, they just don't work out for you. If I'm describing you, then I think what you might want to consider doing is putting an X through that trade. Now, understand what I'm saying here, right? I'm not saying that that's not a good trade. I'm not saying that that's not a legitimate trade, because it is a legitimate trade, and lots of traders take it and they make money with it. What I'm saying is this, and the emphasis when I wrote this is on what word? Does this say team here? Am I saying the Viper team when I did this sentence? Find the trade setups that the Viper team are comfortable with? Is that what I'm saying? Or is I'm saying you, specifically you? Yeah, it's you. Now, let's move on. Some of you typed in an S when these bars started to form right here. Now, looking back on it, was these bars right here meeting a mid-band criteria entry? You got 1, 2, 3, 4 yellow bars. Is this a mid-band short entry by our definition, yes or no? Should you have typed an S in when those bars formed, yes or no? What say you, team? Yes. Here again, that's true, OM. That is correct. If you had enabled short side only, and you formed the region box as I show it right here, there was no close below it, and therefore it was never filled, just like the minimum criteria right here. But that wasn't the question, right? Here again, I'm hearkening back to the exercise at hand, right? The exercise at hand is not to say, did you get filled on a short? Did the bars meet the criteria? And the answer is yes. That's a legitimate mid-band trade. Now, I'm going to say this. I'm going to put a couple of stars around this. When I say find the trade setups you're most comfortable with and then only trade those setups, I'm going to do this. I'm going to say this. One of the most important trade setups you can learn is mid-band trades. And the reason for that is that I can't give you an exact percentage of those, but they tend to have a very, very high success rate in the fact that the distance normally between where the thrust occurred and the depth of the retracement, which is normally in the 20 to 22 tick area, provide enough meat on the bone in the trend direction for you to make money. That is the reason, there are many reasons why they make money, but that's one of the main reasons that we like mid-band trades. I got to tell you straight up, mid-band trades are my go-to trades. If there is a trend and there is a retracement back anywhere around the mid-band and it kisses and rolls in the case of a short or bounces and goes up in the case of a long, I will almost always take that trade. This is my go-to trade right here. And if you learn that and get really, really good at it, I'm not going to promise you anything, but I can say there's a high likelihood you're going to make money consistently. Now, in this case here, you can see that the bars continued up a little deeper. And this is the reason that when you're in a downtrend, you do not enable both sides. You would not enable long here because the close of this bar, if you enabled long, would get you long, and then you would stop out in a double whammy because now you're long and you really wanted to be short, so you take a full stop out and you miss the short. So in the case of the downtrend where it's solid like this, you're taking shorts only, enabling only shorts. Now, let's blow this entry up. This is somewhere between, these bars are somewhere right in between midband and deep retracement. Technically, a deep retracement would fall more like up into this area right here. But you have pushed beyond the midband. So, you know, you're sort of on the cusp of deeper retracement here. Now, this kind of, you know, sort of wigs traders out a lot of times, the fact that the bars have turned blue. Does that freak anybody out? You know, you said, Charles, hey, we're in a downtrend. I'm looking for shorts. What the heck are these bars turning blue? And I'm above the midband. This is freaking me out. How do I know that this isn't a trend change? How do I know I'm not going to get a short here, right? And the next thing you know, it's going to flip and then take, you know, I'm full stop out and going to get hammered. I don't want that. I'm nervous taking this. You know, when these bars get up into here and they turn some other color, I don't really like that. Sometimes that is a trend change and I get smoked. I don't like that. Now, if I am describing you being every single person in here, we got a great turnout, welcome everybody. If I am describing you, just like this minimum criteria I put an X through, should you take these trades? The deep ones. Yes or no? That's a yes or no question. If these bars are freaking you out, the fact that they're blue, is it says it's going way up here in the downtrend. It's going way out, it's kissing way out here somewhere and everything, and you're thinking it's going to flip and bounce and take off like a rocket in the other direction. No. We're going to continue to teach it. Okay, just by me putting an X through here does not mean that's a bad trade. That's not what I'm saying, right? I didn't say that. I said it's still a legitimate trade and a lot of people take it, and we're going to continue to teach it. Is that saying that if you're not particularly good at it, that you should take it? No. Now look, it might be the complete opposite. I know traders that are really good at minimum criteria trades, and they take those all day long. Sometimes when they get, and they're good at midband, so they're good at this one and this one. So they got 2 out of the 3 in their basket, right? I know traders that are really good at deep retracement and midband. The minimums they don't like, so they don't take 2 of the 3. They take these 2. I know some traders that don't like the minimum and don't like deep, and they love the midband. They get really good at that. So that's what this statement is geared towards. I'm not disparaging any trade setup we're showing here. I'm not saying anything good or bad about anything. What I'm saying is we're going to teach it, and you need to embrace it, and when you do, run with it. Now there's number 2. I'm going to call it 1B in the fact that these are equally important in terms of priorities is, and I'm going to say this in 2 different ways. The most simplest, highest way to say it is keep things simple. Now, you hear this bantered about all the time in trading. What the heck does keep it simple mean? It means 2 things. First thing is, really, truth be told, I saw a few people in the live room this morning had typed in the fact that they were looking at 4 charts. Do you think it's a good idea to look at 4 charts and try to trade them live? Anybody? Just yes or no? You think 4 charts, looking at 4 charts in real time is a good idea and trying to trade them all? What do you think about that? No. No, absolutely not. You should only look at 1 or 2 charts, and I'm going to say capital MAX, maximum. No more. And the reason I say that is that physically, and I can't say that we've done a ton of studies on this, but I've observed it on myself over the years, is that once you get beyond one or two charts, it's physically almost impossible for you to see every trade set up in real time. It's just almost impossible to do. You need to narrow down your scope. You need to find one or two instruments you really like. It doesn't matter what they are. It can be ES and crude. It can be crude and gold, whatever. It could be the Russell and gold. It could be any combination. It could be 6E. It could be anything. But don't, please, 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 a million times, please, pinky swear with the entire team right now that you will narrow your focus to one or two charts and get really, really good at one or two charts. You will make money consistently. Your focus will be better. Your trade entries are going to be a lot better. And you're going to find that, you're not missing stuff. You're not chasing stuff. You're not getting stopped out anymore. You see things as they happen. Okay? So now pulling it all together, then what you're going to do is you're going to put the combination so the part of the 1B thing is that which is one or two maximum, find the instrument, and I'm going to say this is a single, not plural, that you really like a lot, and then get really good at it. Not them. I'm saying them. Is there them at the end of this, or is it it? So let me explain what I'm talking about. Is everybody now? Some of you are like, well, what are you trying to say here? You're limiting my opportunities, and what if I'm staring at a gold chart and not going anywhere all morning, and crude's taking off in the 100 ticks, and I missed it. What the heck are you telling me? Well, you got to mix it up. Look, some days, certain charts are going to be running other than others. You need to accept that and find two. I'd like ES and crude. Okay, those are my go-to charts. But if you were to corner me, if you were to put me in a corner and say, okay, ES and crude, Charles, ES and crude, you have to pick one that is your primary focus, that you look at that first. And above everything else, what do you look at first? And the answer for me is ES. So in order, for me personally, you can do whatever you want. I'm just going to write this in here. It's for me. Here's what it is. My primary instrument, my go-to instrument. This is the first thing I look at above and beyond anything else is ES. I look at that first. And I love mid-band trades. Mid-band trades on ES are my go-to trade every single morning. Every morning, that's what I look for. Okay. Secondary, in other words, I'll watch it and look for, it would be crude, mid-band trades. Those two right there. That's it. And I can tell you straight up, now you don't have to do that, okay? Some of you don't like crude. I understand it. I get it. I mean, you like other stuff. Some of you, I hear there's traders in us talking about NASDAQ, and there's YM traders talking about what YM's doing. There's all manner of things you can trade. Well, we talked about David. Now, let me take a quick straw vote here. Gary and I have been kicking around. Here's some of you typing in. Okay, I like crude oil. I like the Russell. Dave, if two is too many, Dave says 2 charts make my brain hurt. Well, then you got to go to 1. Okay. Notice what I say here in the thing here. Keep it simple. Did I say look at 2? What does this say? Here, let me go back. Here. Am I saying? Did I say 2? Did I say only look at 2? What does that say? What is that? I don't mean to be nitpicky. Okay, I just want everybody to be clear. Sometimes there's people leave and there's confusion. What was Charles talking about last night? He was telling me to look at this and look at that, and I got all confused. What the heck is he talking about? It says 1 or 2. So some of you typed in, if I look at 2 charts, I get confused. Well, then you would be looking at 1 chart, right? You wouldn't be looking at 2. You'd be looking at 1. If 2 is too much, then don't. I would strongly urge everybody not to look at more than 2. especially if you're learning. If you want to be successful and get a funded account and start making money early and get your handle on trading futures markets, please, 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 a million times, please, heed what I'm saying here with 1A and B. I can't offer you anything well other than my teaching and what have you, but this is the heart of the matter right here. This is it, 1A and B. Find the setups you're good at, stick with them and do them. Keep things simple, pick one or two instruments, learn them really well, get good at the combination, both the trade entry type you like and the instrument that you pick. Out of the two, if you go with two, find one as your go-to. That's the one that's going to be sitting on your screen directly in front of you. I have 4 huge screens, okay? So I have the ability to put all kinds of charts all over the place, okay? If you've a limited screen space, if you only have 1 or 2, or maybe you're on a laptop, you're going to want your primary instrument to be the big center focus. So what am I talking about? This is the last I'm going to say about it, and then we're going to circle back and look at a couple other trade setups. Let me move on and see if I can illustrate this. Let me do it this way. If you have 2 screens, what you're going to do is you're going to take your one instrument, your primary instrument, and that is going to sit directly in front of you. Okay? This is what you're going to focus on primarily to take trades. And you're going to do what's called selective listening. So in the live trading room, let's say hypothetically it's crude. You love crude, whatever, you just mid-band crude, whatever, you can take all manner of crude trades, and you just love crude. In that scenario, the central focus would be a crude chart like this, right here. That will be your main chart, the 4-range crude chart with our template set up on it, looking for trades. And then you would listen for crude calls, right? Now the secondary focus on your second screen, if you have 2, let's say hypothetically it's ES, could be anything, could be the Russell, gold, some other instrument, YM, NASDAQ, EMD, hypothetically let's say it's ES. This would be the second screen. Now if you have the setup I'm describing here, now if it turns out that you only have 1 screen or a laptop, then you're going to have to do something like this. You're going to have to adjust this and make it a little smaller and make your primary focus instrument more like that. You still can trade both, but you're mainly looking for trades here. Now, if your screen looks like this, or some combination of this with these 2 instruments, and a gold trade call comes in, should you pay attention to it? You have a screen that's set up, maybe you got 2 screens, okay? Maybe you have 2 nice big screens, and you got one on the left one, your crude is, or maybe it's reversed. Whatever, I'm just giving you an example. And all of a sudden you hear some Russell mid-band trade. Like, come back to the Russell. But you're looking at crude and you're looking at ES over here, and you hear Russell. There's Russell calls coming in, RTY calls. Will you listen to those? Do they make any difference to you? Do you care? What do you think? Yes or no? Do those matter? The fact that a Russell call came in? No. That's right, Mario. Anybody? What do you think? This is your screen setup, so that's a real question. Nobody's answering it, so I guess maybe you all know what the answer is. Maybe you don't. I just asked myself questions to hear myself talk. I'm actually trying to get audience participation. So, I mean, to the extent that you participate, you pick things up quicker. Gold calls are coming in, and your screens look like this. Do you care? Russell calls are coming in. Your screens look like this. Do you care? Maybe your screens look more like this. We pinky sweared, and we all swore on a stack of Bibles that we're only going to trade 2. Some of you are only going to trade 1. Comments on the Dow come in. The YM doing this. NASDAQ's running to the moon. Do we care? No. You don't listen to them. That's called selective listening. This is a really hard skill for some people to learn. All traders say this to us all the time. Charles, Gary, I'm so distracted. I really love crude, and I'm trading crude, but you know what? I hear these gold calls coming in, and I hear the rest that call coming in. They don't matter. I can't, you know, I mean, if you're trading ES and you're trading, I mean, are we just supposed to, because you're not in the mood that day to see these instruments, we're just going to chuck them out the window? Well, there might be 100 other people trading these instruments, right? So what I'm saying is these charts are going to remain in the room, and you're going to hear calls. So the way to work around it is to not pay attention to them when they come in, because they don't affect what you're doing. Now, conversely, if your screens look like this, I'm just doing hypotheticals here. I'm just trying to help you get focused. This is really important, and maybe okay, whatever. Here, let's do it this way. Your screens are set up more like this. Okay, some of you might say, I love the Russell. For some reason, that spastic, crazy instrument makes me money almost every morning. I love those, it just takes off and runs. And I make a ton of dough. I can fight through the chop, no problem. And you know what? I've had good success with gold. Crude, I just can't ever seem to get down. And ES puts me to sleep. Well, then your screens might look like this. So then an ES chart call comes in, and your screens look like this. Do you care? No, you don't. That's what I'm saying. Selective listening. It's a skill that is extremely important to learn. So let me recap before we wrap. And thank you for sticking around, everybody. And I got a little off topic, but yeah, I just felt that this is really important because there's a lot of brand new people in here. A lot of people seeing this for the first time. They're getting confused. They're seeing all these calls, and I sense there's a state of a lot of confusion out there. And what I'm trying to impress upon you is just try to identify the trades that work for you. You're going to hear calls in all the trades, right? Minimum, mid-band, deep. You're just going to hear them all. That's the way this is going to work. That's the way the live room has always been. And there's a lot of people that take those trades, okay? You don't have to take them. Cut your screens down to one or two. Find that one or two instrument you really like. And you know what? In the beginning, it might take experimentation. You might have to try 3 or 4 or 5 or 6 different instruments with combinations of what's primary and what's secondary, etc., until you narrow it down. I'd say if you're going to learn one trade to start, if you want to get off to a good start and just focus on something just to wrap your head around, I would strongly urge you just to start with the mid-band trade and branch out from there. You can always circle back and learn the minimum. In fact, I'm going to take the X's off of here because you really, at some point down the road, you want the minimum criteria and the deep to be in your toolbox. I've drawn analogies before. It's like a carpenter going to build a house, right? He needs all sorts of tools. He needs a level and hammers, nails, and saws and everything, all they need to build structure or whatever. Okay, and he just went out there with a hammer. Here's all the lumber. Here's the plans. Let's get this building built. How successful do you think he's going to be? Anyway, how's he? He could take a screw and just pound it in the wood, I suppose. I mean, it's not very practical. It's not a good way to do it. So what I'm saying is that after you master the mid-band trade, circle back and try to learn at least one or two of the other ones that we show setups. Try to get it down to one or two instruments. Get a central focus one that sits right in front of you, whatever it is. Have a secondary one. Do selective listening. If other instruments are called in and you're not looking at them, it doesn't matter. Filter those out. Russell call comes up, you're looking at it, and you already see what you think is a mid-band trade. Somebody says, Gary says, hey, mid-band setting up on Russell, and you're trading it. That should confirm what you're already looking at. Some people taking off. Okay, good. Listen, I'm going to wrap. Went a little bit over tonight. Let me